Good. Are we all settled? Good morning, everyone, and welcome to the Milken Institute, one of the first sessions that we are having today. And I think it's a very exciting topic that we're going to be talking about, obviously cryptocurrencies and blockchain and the development of that industry. My name is Andrew Peaple. I'm the editor of the Heard on the Street column at the Wall Street Journal for Asia. It's our daily commentary column where we look across the world of business and finance. And I must say at the Wall Street Journal, cryptocurrencies, Bitcoin, the rise and fall of the price, and maybe the rise again, has been one of the biggest stories for us over the last year or two. It's an exciting story. So many personalities from Paris Hilton to the Winklevoss twins, all involved in this area. And we have, I think it's fair to say, a range of views about cryptocurrencies that we've heard from the people that we talk to. Many skeptics out there, of course. A lot of people, though, who are big fans of cryptocurrencies. And a lot of confusion, I think, about this developing industry as well. So this morning we have an excellent panel who will be able to talk us through some of the issues and some of the questions that people may have. I hope that towards the end of the session we'll have a good chance to have some questions from the audience for our panelists. At the same time, I think you'll know that on the app, if you've downloaded that for the conference, there's also a chance to vote on several questions about cryptocurrencies. It'd be very interesting to see what the feeling of the audience is about cryptocurrencies right now. So if you have a spare minute while you're listening, please do have a look at those questions and take part in the survey. Anyway, it's my great pleasure to introduce our panelists this morning. I'll just quickly introduce them to you. On my far left, we have Jeffrey Lin, who is the Chief Executive and co-founder of GCoEx, which is the world's first celebrity crypto token exchange. Next to him, we have Sam Engelbart. He's the co-founder and the partner who runs the venture investments business at Galaxy Digital, a firm that's invested a lot in this space, and be interesting to hear from him. On my left here, Karen Chen, Chief Executive and co-founder of CoinSuper, which is a Hong Kong-based cryptocurrency exchange. Karen has a background in, should we say, conventional banking with UBS and Standard Chartered, so interesting perspective there as well. On my right, Ron Tsao, founder and managing director of Sky9 Capital, which this year closed its third fund, raising $200 million. Ron has a deep and long history in investing in tech and particularly in the Chinese space. So some great insights there, hopefully, on investing in cryptocurrencies. And on my far right, Bill Barheit, who told me backstage that he's been waiting for 30 years for this moment, for the rise of cryptocurrencies. He's the founder and chief executive of Abra. It's an app that allows people to invest in nearly 30 different cryptocurrencies, I think, now. So, ladies and gentlemen, just a quick round of applause for our panel, and we'll get into the session. So I wanted to start with just a very broad question for each of you in turn. Where are we now in the development of cryptocurrencies? What we've seen over the last year, has it demonstrated that it's all just a speculative bubble, or are we still on track to see cryptocurrencies developing as something that's really going to revolutionize the world of finance? Can I get an initial perspective from all of you on that? Maybe start with Bill, please.
Sure. I think there's two things happening in tandem here in the crypto world. The first is related to the development of the technology itself, and the second is related to kind of the speculative nature of what's happening with crypto investing, and both need to kind of converge at one point to make this truly useful. I'll address the second point first. So if you look at what's happening with cryptocurrency speculation, I'm specifically talking about Bitcoin now because it's the one that has definable scarcity and a predictable rate of creation and is truly deflationary. It's really playing out the Austrian school book exactly as predicted, long before the existence of Bitcoin, right? If you go back to writings, Rothbard, von Mises, they all talked about what would happen if a truly deflationary asset were created. And basically, the idea would be that a deflationary asset would be hoarded first before it was useful because of the very nature of the fact that there was, definable scarcity. And Bitcoin is playing out that rulebook. As a matter of fact, it's astounding that most people don't understand that this is really happening in front of our eyes, right? The fluctuations in price. I mean, look, this is a $100 billion Bitcoin specifically, asset class that didn't exist 10 years ago. That's insane. When was the last time we had a new asset class? I believe before gold, like never, or fiat, never, right? So it's playing that out. The second part is the technology, and by the way, once the model predicts that once the asset class reaches stratospheric levels, people will loosen up the purse strings because they feel compelled to now start to use that asset to buy things and invest in other things, et cetera, et cetera. We're not even close to that yet, okay? The second part is the technology itself, because at its core, Bitcoin is programmable money. It's not just digital gold. Right? And in order to use Bitcoin as programmable money, things like simple smart contracts, contracts for difference, and other types of financial instruments like what Aber does, we need a whole lot more work in the background to happen to take that from the rudimentary capabilities that we take advantage of today to the next generation of programmable money. I mean, it's very much like the evolution of the internet. When TCP/IP was created and PCs didn't have TCP/IP software in them in the 90s and you had to install it, that's the evolution that's happening now for Bitcoin as programmable money. And I think in the next 3 to 4 years, the evolution of the tech, the evolution of the speculation and hoarding will converge to the point where now the asset class could be worth $500 billion, and all of a sudden people are loosening up the purse strings.
Okay, so in a sense, we're still in the early days almost. But,
absolutely.
But developing
makes it so
fast.
exciting. Yeah.
Karen, your perspective, you obviously, as I said, left the world of banking to launch CoinSuper. Tell us a little bit about that and what your perspective on where we are with cryptocurrencies right now.
Yeah, of course. Yesterday, actually, I met with a pretty senior person from the traditional financial industry, and he still thought that crypto is mysterious, just virtual. And then when I showed him the platform, he said, wow, it's pretty easy, and it's something I'm familiar with, just like trading stocks. So I will talk about from the infrastructure perspective. I think it's early stage at the moment. However, there's a lot of confidence we have since being in the industry for a little while. That because that we learn a lot from the blockchain, from cryptos, from ICO projects, there are more and more smart people and people having the experience from different industries, many also from the traditional financial industries, to come to reshape the infrastructure, and also working very closely cross-board with different regulators and supporters, understand the risks and insert the right behaviors and the risk management tools. The goal is to help people to easily understand the business, understand the risks underlying this. Because for the traders or investors, volatility is not bad. It's something seems to be a good opportunity to people if we do see this is an asset class. So what we need to do is to strengthen the infrastructure and risk control. Then it will be a very interesting areas for the traditional people, financial people to look into.
Excellent. I think risk control is an area I'd love to come back to later on. But in your view, there's a sort of critical mass of people who are involved in the industry, it seems to be developing.
Yeah.
Jeffrey, could you give us your perspective? You've obviously launched GCoEx recently. Mm-hmm. What's your view of where we are in this world right now?
I guess last year, where the price rockets for Bitcoin, Ethereum, and most cryptocurrency, I see that that's like a first wave. People just dive into it without much consideration. So actually, for blockchain or cryptocurrency, I feel that most people do not really understand what it is. Mm. And a lot of these companies out there, lack of corporate governance. That's one, because it's very new for ICO companies to raise so much money before doing anything. So it's about how they were to carry on with the business itself, developing the tech. This is something that I think we need to watch closely these 2 years, because there's a lot of deadlines for all these companies coming up. Then for crypto mass adoption, which is what our platform is trying to achieve here. Our exchange only lists our own celebrity tokens, which is fully backed only by utilities. So we are not on the very speculative model. Yeah, like we'll go into votings on the blockchain, ticketings. Like in November is one of the pilot projects that we have. We're going to do partial concert ticketing for Guns N' Roses concert in KL. So we are bringing a lot of real life case into the industry, into the market, where people or consumer actually buys crypto tokens for a purpose,
right,
rather than very speculative. Because if everybody wants the price to go up, then who will actually take you out when the price is low, right? Yeah. So this is what I feel on the industry itself. We need to really watch the space, corporate governance, engaging the regulators, because without the blessings from regulators, it's very difficult to cross border.
Right.
Yeah.
Some practical uses. I think I'm going to see Guns N' Roses, but I've already paid for my tickets, sadly. Sam, one of the themes coming up already is the sort of trust and security around here. As an investor at Galaxy Digital, can you give us your perspective on this space and how you look for investment opportunities and where you see the industry right now?
Sure. I'll speak about venture investments in blockchain technology companies, because that's what I spend nearly all of my time focused on. I'm extremely bullish about it. I was more of a generalist technology investor as recently as 3 years ago, 2.5, 3 years ago. And back then, what I saw around the world was the smartest technologists, investors, entrepreneurs, people generally, philosophers, political theorists, et cetera, that I knew and that I met were consistently choosing to focus most, or in many cases, all of their time on blockchain. And that was why I was inspired to dive into it in such a complete way. And that's never been more true than it is today. I mean, for all of the talk around the cryptocurrency speculation and the bubble and so on, and there certainly was one. The past year was not the first speculative mania to hit the blockchain world, and it won't be the last. And it's interesting because most venture investments, particularly early technology investments, which is where we are in the development of this tech today, most of them fail. It's playing out in a little bit more of a public way now because of the public nature of the token piece of the business. But several amazing teams of engineers and entrepreneurs raised money in the last year, and they are heads down building now. And if you go talk to engineers at the FANG companies, let alone smaller startups,
yep,
they might talk about their company. They all want to talk about the blockchain idea they have and what they would do and where they see the future going. So I think if you travel the world and you meet with the great engineers and the great entrepreneurs out there, there's no shortage, and in fact an incredible surplus of people with great ideas that are ready to build on this technology. We're just getting started.
Ron, is that your experience as well, that you're seeing a sort of vibrancy and a sort of gathering of talent in this world that gives you sort of some optimism for the future of this space?
Yeah, for sure. Hopefully I can provide some context in terms of in China, what they call a classic investor, the traditional VC investor looking at the space. We've been investing in crypto or blockchain since 2013. Our first investment was in BTC China, which was the first exchange in China, when Bitcoin price was less than $100. And been following that space with other investments, mostly around infrastructure. So just pick up your point. I think what is, well, first of all, I think it's still in the early days, and this, the recent price decrease significant price decrease could be the the end of the first phase. It's not clear how many phases they are, but I think perhaps the first inning of this revolution, and I suspect the future innings will be much faster and more efficient. But what we're seeing right now are really the first time we're seeing what we call tier 1 entrepreneurs, entrepreneurs who have built companies, understand how businesses work, regulations work, jump into the industry. We have not seen that for the last 5 years since we've been investing. Mostly, you can argue they're people who are non-mainstream in creating crypto businesses. And I think ultimately it's going to be the same. Our traditional VC investing versus crypto investing is really about people and the business they built. Making money doesn't mean it's a great business. There's been money made. Some of these businesses have not lasted. The highest returns are fundamentally great CEOs and great business models.
Making money maybe isn't the be-all and end-all, but companies do have to make money. Are there companies in this area that you're seeing that have business models that you think are going to be successful? And is there a sort of pattern developing there, or is it very diverse still?
It's very diverse, and the thing about venture capital that's interesting is that there's so much unknown. We probably put around 10% of our money into this space. I would say a lot of it is still exploratory. We have those investments we make where we have high conviction. We do have conviction around the space and in the direction, but it's really hard to decide which model works. So we're experimenting. What we like to put our money to work right now are really infrastructure investments.
Right.
Exchanges, wallets, really infrastructure, sort of apps, and also technology infrastructure. Next generation Ethereum, public chains that can do certain features that the current systems may not provide. Those are core investments. Then selectively, we'll look for applications where it could be a traditional internet company that have large user base, and they're trying to tokenize that economy. People talk about that, and there hasn't been a formulation for how to do that. But conceptually, it's very powerful when you have, especially in China, certain online communities that have millions of active users. Right? Can you tokenize that? Is a very compelling thesis to go after. So those are some deals we do, and we try to find the right CEOs. That's always at the end the core thesis.
Bill, fascinating introduction you gave there about the sort of timeline here and the history of cryptocurrencies. What is going to be the sort of tipping point here in terms of adoption? What do you see as the potential ultimately for cryptocurrencies? And at what point are we going to start simply using things like Bitcoin to pay for things on the internet, pay for groceries, pay for our everyday...
Yeah, it's a good question. I think the evolution of Bitcoin is mirroring the evolution of the internet itself. Right, in the early days, it was a very hands-on, I've got to set up my internet connection, right? I got to install a TCP/IP stack. I got to know a little bit about basic computer stuff in order to use this. Now you start Netflix and you have no idea what's going on in the background. Right. If I explained it to you, most people's head would spin.
Right.
And luckily, we don't have to know that.
Yeah.
Right. So I think that what will happen with Bitcoin is that ultimately it will become a rail for payments, banking, money transfer, credit applications, but the average user won't know it's there. Right. So today, for example, if you're using the Abra app and you're holding Singapore dollars in our app, you're actually not holding Singapore dollars in a bank. You're holding I'll use the tech terms to make my point, a multi-sig crypto-based contract that pegs the value of cryptocurrency to the Singapore dollar. Now, I venture a guess that most people here couldn't explain what that means. Right. But we're fine with that. Right? Just like you don't know what
I'm assuming that you can.
It has to work. Obviously, if we get audited, it has to work, and it does. But we processed hundreds of millions of dollars of transactions the last few months using this model. The point is that as this scales, I believe most people won't know they're using it. Just like most people don't know they're making a TCP/IP connection to a Netflix server to stream House of Cards. Right? And so at that point, it changes everything. Because now you're not dependent upon international settlement systems that are based upon old fiat models, the SWIFT system, which is arcane, and as people in Southeast Asia can attest in the news last year, very insecure, and a whole bunch of other issues around money markets and credit that just don't work well right, in the 21st century. And these are real problems that cryptocurrency-based models can solve at large scale. right? But I do believe that it's not like people are going to be saying, okay, I want to pay in Bitcoin for my cup of coffee. They may be paying for Bitcoin or with Bitcoin for their cup of coffee, but just won't know it. On the surface, it'll look like Singapore dollars, but the settlement between your wallet and Starbucks bank account may actually be using a cryptocurrency in the future.
I see.
Right? And I think Bitcoin is optimized in the way it's, again, I use the phrase programmable money to do those kind of transactions.
I think I'm following. If is it your view, though, that this world is going to coalesce around one particular cryptocurrency or one particular technology? We've obviously seen some stories over the past year, some obviously fraudulent cases, some currencies that have been pretty dodgy, frankly.
Right.
How do we, as just ordinary people, know which cryptocurrencies are going to are trustworthy? And in your view, is there going to be sort of one standard that develops here?
No, I think there's going to be lots that succeed. There's hundreds, if not thousands now. We track all of them. There's about 28 or so that are live in our app today. They meet very stringent liquidity requirements for us to offer them. It's another discussion. But they also offer a lot of variations in the technology stacks. And that's essential for the development of the space because it basically creates competition from a technology perspective, right? Monero and Dash are focused on the privacy aspects of the currency, Zcash as well. Bitcoin has kind of become that kind of de facto digital gold where it's incredibly secure. It's probably the most secure computing network in the world. Litecoin tends to be a little bit more high performance throughput because of the block size changes. So there's lots of reasons why you would want to use one versus the other if you were developing applications in the future.
Right.
Right. But the average consumer won't have to make those decisions. Right. Traders at places like Galaxy will look at the liquidity opportunities there, but that will drive the value that the programmers need to make those applications work. So the two will go hand in hand.
I see. Jeffrey, is that a similar perspective? Do you feel that we're going to sort of live in this world where there's a variety of cryptocurrencies, or I mean, it was interesting what you said about the sort of single uses for tokens that could emerge.
I look at it, you know, now there's like a few thousands cryptocurrency around, like all based on very unique technology aspect. Eventually, I would say that a lot of this will go off and we will have a few main ones, like now Bitcoin is one. Just like what the Singapore government is doing for Project Ubin, you know, we're trying to create a consumer to business and business to business cross-border platform, which is actually behind the scenes. So on the surface, it's seamless to the user. You know, it's just a click of a button. I think it's all about habitual now, and with the blessings of the regulators and maybe enough regulators to have a main crypto token or currency that is going around. Because once you cross border, you know, it's another jurisdiction, and regulators need to work together to actually believe in one or two or maybe 5 main crypto tokens. Then I think this will actually take shapes and things will start to move off from there. Yeah.
With GCoex, celebrity tokens, this is the sort of thing that some people become skeptical a little bit about when it comes to cryptocurrencies. I mean, I remember over the past few months, it seems like my inbox is full of sort of new press releases about some celebrity is launching a new cryptocurrency. And frankly, quite a lot of the time, I just delete those emails because it seems like a load of fluff. But can you just explain a little bit more about that space and why you think it's actually a sort of genuine opportunity?
Okay, like example one of the projects that we're going to announce to the market soon is actually with Mr. Stephen Chow, you know, the artists and directors in Hong Kong. So based on his token itself, it's purely on a voting consensus transparency, you know, because looking out for new stars, you know, every part of the industry in making a movie, from scriptwriter, cameraman, soundman, lightman, costume design, every part of it, you know, there's a lot of new talents out there that need to be showcased to the world. So we actually uses ecosystem and a blockchain to actually based on voting. So that's for Mr. Stephen Chow. So for concert ticketing on blockchain, speak to a lot of concert producing company. Actually, they face a very big problems with aftermarket tickets. You know, people reselling, like, example, Guns N' Roses tickets for maybe 10 times more. So we want to address this. We want to address this, and we want to break down certain industry and want to disrupt it by creating better services, transparencies, accounting.
Okay.
Yeah. So the celebrity token exchange, you know, is only one part of it.
Right.
Yeah.
Okay.
Actually, there's a lot of other services that we have within it, and all is powered by blockchain technology, and each one have its own unique selling point.
Yeah.
Yep.
Karen, I just changed tack a little bit, speak about your background a little bit. It's interesting that you've gone from the world of banking, as we said at the start, into this area. Do you see others, colleagues, people from that world moving into cryptocurrencies and blockchain? And what's the attraction to you? Why are people like you making this kind of this move right now?
Yeah. I think when I've been doing banking for so many years, and in the past 9 years, I was the CEO for major foreign banks in China. So I know the traditional or commercial banking business pretty well, and I know customer much better. What do they need? So heard a lot about them talking about fintech, AI, robotics, etc. I was scared because these are the things I didn't understand. So how was I able to advise them on the investments because I didn't understand? So that was such a great opportunity to come to really engage in the business, help me to, because running an exchange, we're not just building the infrastructures. I meet lots of people, from investors to the project CEOs and technical people, etc. So we really learn a lot, and we run 24/7. So just slept a lot, very much lesser. But you really get to know this, and I think this is the part attracting the bankers to come into the business, coming to the new trend, to understand it. Otherwise, you know, I hear people outsider, they still say this is scam, this is something people should not touch. But people talking about this, you need to have the confidence that you actually understand it. So if you don't understand it, yes, you should not judge it. So I think this is the part attracting the professionals to come, and you can really play a major value in this business. Now I feel much better, and Sam said he's very bullish. I'm actually also bullish about this because I see many very top-tier talents willing to come into this business. It's because when you are top talents, you're always curious and always want to get yourself challenged out of your comfort zone.
Right.
So they want to learn, and they want to add value to their customer. And another fascinating part is I've been doing wealth management, private banking for many years, and had a lot of great customers. But for very rich families, sometimes you only talk to gatekeepers,
right,
CFOs. But now I've got a chance to talk to the real owners because because this is risky, so they want to know it. And they want to talk to the real experts. I'm not expert yet, but it really opened the door for myself and for many new talents.
So some of the family offices that you used to speak to are really interested in this area.
Yeah. I think they may not start it yet.
Yeah.
But I heard a lot nowadays say, "Oh, we may think about putting a allocation." You know, they know about asset allocation very well. It's because this is part probably people should not miss. I talked to many people that I believe there are two main drivers, actually three main drivers. One is blockchain technology, great talents in technology, and try to evaluate and even change some of the traditional business. Second is the infrastructure. We are working very, very hard to build the infrastructure, and not just us. And I think Bill and many people, wallet business, custodian business, settlement, etc., brokerage, we are building the infrastructure. And number three is young people. In this business, I talked to many, they are so young, only like early 20s. They are so smart. They are just white paper. They see the world differently. And they are not speculators. They love this. They love decentralization. They love no borders, sort of freedom. I think these three things would support the business going for very, very long run. So you see bearish and bullish, and this sentiment can change daily because it's so dynamic. But in long run, this will be something, I believe.
I'd like to bring Sam and Ron in here as well, and anyone else on the panel who'd like to speak on this. But there have been a number of scandals around exchanges over the past several months, particularly in Korea. Lots of examples of exchanges being hacked and people losing lots of money. As an investor, how do you navigate this? How do you get comfort that companies like CoinSuper and so on know what they're doing, have good controls, are secure businesses, have proper corporate governance, that kind of thing? Is that something that's developing now? Maybe perspective on that, please, Sam.
I mean, as an investor and in terms of evaluating the security of the investment or of the company, I think you do it the way we've always done it, which is understand the technology as best you can, understand the people who are running the business, and understand the points of attack and the vulnerabilities. There have been a number of hacks in the crypto world. There have been a number of hacks, far more serious hacks in the world at large. We are going to see an increasing number of security breaches of scale that I think most of us are not really prepared to understand. Ultimately, one of the things that I'm excited about with respect to blockchain technology is our ability to protect and build a more secure world with blockchain. Doesn't mean there won't be hacks along the way, but decentralization is ultimately good for global IT security and data security. It's good for a lot of things, by the way.
Just develop that thought. Why would you say that? Because obviously a big appeal of this world is the lack of sort of traditional regulation and so on. Why do you think that decentralization works?
The regulation part will get worked out over time.
Right.
The technological infrastructure, though, and without trying to get too complicated,
get as complicated as you like.
The technological infrastructure, in a very simple way, reducing the value that exists in a single point of attack is a good thing from if nothing else, from deterring people to spend the time and energy necessary to make an attack on a particular place or institution. When you have a lot of valuable information organized in one place,
right.
People are going to spend a lot more time and a lot more energy attempting to hack it and gain access to that information.
Sure. Ron, thoughts on this area?
No, it's a great point. I mean, the bigger trend, as Karen alluded to, is really the decentralization. I mean, from Uber, Airbnb to blockchain, in some ways, it's all part of the same path to a decentralized world. And then, digitalization of content back in the 90s. Now it's really digitalization of assets going forward. Those trends are very powerful, almost once in a lifetime type of trends. We're investing in CoinSuper. The key thing to the investment is really quality of management. People who have built businesses, be in leadership positions in real business, and have governance in place, makes us feel comfortable to make the investment. And I think the days are over in terms of a company coming to us, say, hey, we're a decentralized organization, all we offer is tokens, you want to be in or out. I think that those are done. We, at least for institutional investors, maybe for retail, et cetera. What we do is we're always in. If we invest in a token, we would invest in the equity. We want rights. We want governance. We want boards. We want all those things that we would do in a typical investment. And I think that's those two worlds, the crypto world investing and VC investing, are merging as we speak. And I think regulation. Last point. It's really disruption. I mean, it's always a cat and mouse game in terms of regulators, but usually it is the innovation and the young people come up with new ideas that we need to find better ways to make those more useful and be available to everybody. So I think governments around the world, including China, US, are very active in trying to figure this out. And it might take some time, but I think we're on the right path.
Bill, what is the proper role for regulators here? Is it just to keep out of this and let it develop as a sort of cross-border thing that can run itself, or are governments and regulators right to be looking at cryptocurrencies and getting worried about it?
Yeah, that's a really complex question. So I guess if I put my Cyberpunk hat on first,
yeah,
and we'll work our way.
Just remind us about Cyberpunk. And
yeah, so I mean, if you've been paying attention to this world for more than 20 years, really the combination of SSL on the web, which I was in the team that created at Netscape, and then the first digital currencies, and now blockchain, it's all playing out that kind of cypherpunk manifesto. But now that group would like to take the regulators, put them in a big lockbox, and throw it in the ocean.
Right.
And I wouldn't say that those thoughts have never crossed my mind.
Right.
But on the other hand, if you put that aside for a second, and I think where they have valid complaints about the status quo is what actually Bitcoin enables, and that's a trustless environment, right? The hacks that have happened have had nothing to do with Bitcoin as a protocol or a network. It's because people store keys online, which is the stupidest idea in the history of ideas, right?
Right.
Don't leave your keys online, and they can't be hacked, right? So with Aber, the keys aren't online. I have no access to the money. Okay, so that's the cypherpunk perspective on this. It's like radical self-reliance, right? Okay, so then there's the perspective of, what if I'm using this as a commodity for trading, right? And somebody else is managing my keys, whether I think it's a bad idea or not, it's happening, okay?
Right.
Or I'm using it for money transfer, which is regulated as money service businesses or e-money businesses in most countries. So I think if they're willing to basically take the existing regulation and not treat our world any differently than anybody else, I think most of my cohort accepts that that's reasonable. It's when they step in, like the first version of the bit license in New York, where they have no effing idea what they're doing, and create nothing but chaos, right? Where they actually try to regulate software or the ones and zeros that you store yourself, which is untenable.
Right.
They realize their mistake,
yes,
right? But the cat was out of the bag in terms of how stupid they were in terms of not understanding the space. And California, for example, has taken the opposite perspective. When I've talked to them, they said, hey, look, we don't get it. So what we're going to do is we're going to watch for a few years and figure it out. Now, that to me was really smart, because they can now come in and say, we've watched you all make these mistakes, do these things right, and we can add value vis-a-vis the existing regulations, right, without just taking a broad brush, right? The other perspective is what happened in China, which is really interesting, because the exchanges did some things that I would say are stupid around what they did with not actually validating who these ICOs were. And the Chinese government basically took the opposite perspective of California, and he said, you know what, you're all done.
Yeah.
Right?
Yeah.
Now, you could say, okay, well, if I wasn't doing any of that, and I was just enabling Bitcoin trading, why are you doing this to me? Right? And that's a fair response to that. Right? But at the other hand, the government felt compelled to say, hey, look, we don't understand this ICO market. The people who are investing in it don't understand this ICO market. Everybody's the same, which wasn't true, by the way. Yeah. But they just felt compelled to take a broad brush. So I think when they look at this in terms of how to apply existing regulations with a round hole, round peg model, it makes sense. Right? But if people are going to start storing keys on their phones, leave them alone.
Right.
Right? And I think that people are waking up to the fact that you can't regulate people storing their own ones and zeros. Right? China didn't outlaw Bitcoin. There are a few million people in China that have Bitcoin on a hard disk or on a smartphone.
Yes.
And so the government didn't say you can't do that. Right? What they said is you can't use a public brokerage to facilitate the buy and the sell.
I would add I would just add one. I generally agree with almost everything my friend Bill says. I would add one piece to this, which is implicit in the argument there is that by taking their time and waiting and watching and so on, they're going to ultimately reach the right conclusion. Now, we've seen, unfortunately, and especially with technology, that a lot of the time they can really take their time and study something for quite a while and then make an incredibly bad decision. And it can be politically influenced and everything else. We've seen this with net neutrality. We've seen this in a lot of different things. Yep. So, I mean, what I generally say is it's good that in the instances where they're not reacting aggressively and early, it can be a good thing that they're paying attention. We all need to make sure that we're helping to educate the regulators and the politicians as well, and steer the ship where we can. We have an opportunity by them not acting so fast, but the likelihood that they make a radically bad decision, and particularly in certain countries with certain governments today, is something we need to pay attention to, and we need to try to head off.
The ETF applications represent a really interesting problem.
Right.
I mean, for the people in Asia who are not clear on this, there's probably 12 applications pending at the SEC in the US for companies that want to launch exchange-traded funds for Bitcoin. And every one that's been processed so far has been denied. And I was unfortunately slightly misquoted, but more or less said that I think part of the problem is that the people that are making these applications, don't look like traditional bankers.
Right.
Right. They come in, not Tyler and Cameron, who actually have really nice suits, but
yes.
Some of them in jeans and t-shirts and long hair and all this stuff, and they don't look and smell like people like the wisdom tree that are running ETFs. Now, on the other hand, who wants to be the person at the SEC who has to go explain herself or himself
when this goes wrong?
When it goes belly up.
Right.
I get that. Okay. But on the other hand, there's clearly demand for this. Otherwise, there wouldn't be 12 applications pending. So what do? Because they can't just sit back and do nothing now. They have to legally and ethically process these applications and/or go to court and defend themselves, which is probably where this is going to end up.
Yeah.
Yes.
Absolutely.
And language matters too. I mean, there's all this talk about blockchain and disruption, and I think in some technology, it's great to talk about disruption. And if you're disrupting old media, it's one thing. When you're talking about disrupting financial institutions, I think it's helpful to talk about evolution and ways that we can make the system better for everybody, as opposed to radically alter it and blow it up.
Yeah, we've had quite a lot of disruption in old media. I think we've had enough.
Well, yeah, that's
enough for now. Jeffrey, Karen, Ron, anyone else got a thought on this? I wonder in particular whether there's a reason why cryptocurrencies and this world has gained particular popularity in Asia. Do you see that continuing? Do you see this part of the world really sort of leading the way in the development of this industry? Karen, sorry.
Yeah, I think on the regulatory front, we do need them at this moment. I think for the benefit of more people able to come into the business with comfortability, it's important. Why is, if you look at this, is anything as an investment or as a financial products, at least have one feature, is liquidity. And liquidity have two elements. One is convertibility, and second is an active secondary markets. So on the convertibility part, because you still cannot easily use the cryptos to buy anything, you need fiat, right? So you need fiat, you need banks. And the banks can only support you openly, aggressively, with the support of regulators, because they are regulated and supervised. So I think at this moment, have a friendly regulator is important. The thing is how to engage them. One very encouraging conversation I heard, you probably heard from the chairman of CFTC. When he joined the hearing, he said that his sons bought Bitcoins. And if his sons bought Bitcoins and they certainly are not speculators, which means these are something young people believe in. So if regulators really open mind, try to understand, and with the ultimate purpose to protect investors, I think this is healthy.
Sure. Ron, is there a particular reason why cryptocurrencies have become so popular in Asia? We've seen sort of the real center of trading in cryptocurrency. Obviously, the US is powerful, but China, Japan, Korea have all been very important in the development of this. Do you see that continuing? Why is it so popular out here? And do you see the sort of industry being led from this part of the world?
Well, it's certainly been popular in China. I mean, one argument is that Chinese investors don't have access to a lot of different assets around the world, and this is digital, ubiquitous. It was easily accessible. Two, Chinese are very technology savvy. Mobile, internet users. So, but with the recent, sort of crackdown, if you would, ICOs and exchanges being really shut down in China, a lot of that movement has gone outside of China. But it's in Singapore, it's in it's in Hong Kong, it's in Taiwan, it's in Japan. So I think Asia still would, and there's a lot of talent around those regions. So there still would be a driving force for innovation in this area. Certainly Silicon Valley, New York, those are, I would say, some of the where the talent pools are. I think there's better days ahead in terms of true innovation around this technology and applications.
We've got time for some questions. I'd like to throw it open to the audience. I see some hands raised already, which is a very good sign. I think the microphones are ready. Sorry, I'm looking around, but maybe the lady on the table here to my left.
Sure, thank you for joining us.
Sorry, I should say, could you just say who you are and where you're from, if you wouldn't mind?
Sure. My name is Olga Ovdenko. I'm based in England. Can you speak on the current state of the crypto markets and how that's affecting blockchain investments, the equity side and ICO side? And then the second part is, I don't know if any of us can really answer this, but do you have a vision as to where the crypto markets will be, next 6, 12, 24 months? Can any of us predict it? Is there that we can glean from the experts here?
So I think, I hope you all could hear that. Just a question about the development of cryptocurrencies in the market over the next 6 to 12 months. We talked about that a little bit already, but Sam, maybe you could have another go at that.
Well, on the investment side and the environment for investments in blockchain companies, I mean, what we've seen over the last year and a half has been kind of a constant pendulum swing, I would say, in terms of the leverage between the entrepreneurs and people building companies and raising money and those of us looking to invest capital in the space. I think the wilder that the cryptocurrency markets got and the more that speculative moment grew, the more people came into our office looking to raise money for tokens and no equity and no rights, and Ron touched on this a little bit. I think we're absolutely back in an environment where we can make a reasonable case for really backing people who want to partner with capital and with strategic investors to build businesses and capture value together instead of just look to go out to tap retail markets from people who are really just speculating and intending to flip and trade the tokens they acquire quickly. So again, I think it's a great environment for investors. I think it's a great environment for people for capital to partner with entrepreneurs and technologists to go build things that are going to create real value over the long term.
Bill, sorry, you wanted to come in?
I maybe talked about the question about the broader Bitcoin and the state of those markets. Mentioned earlier, I think we're at a little over 100 billion in market cap right now. New asset class didn't exist 10 years ago. Generally being driven by smaller traders, retail investors, no real institutional money yet in the asset class. Now let's think about that for a second. No real money in the asset class. Now, there are some challenges with large institutions, the Goldmans of the world, putting money in crypto. Custody, legal issues around that, trading and settlement, tax, what happens when there's a hard fork, who gets the money, et cetera, et cetera. But I know firsthand that most of the large banks want to do this, both on the prop desk and on the buy side. So they're trying to figure this out. Now do the math. If the top 50 institutional prop trading desks start putting their clients, on the buy side, people start putting their clients into crypto, what's going to happen to the asset class? I predict it's going to happen, right? So you can guess where I think it's going. But I already talked about what should happen when you have a deflationary asset anyway. It should be hoarded. And so it's a question of when. So inside of certainly of the next 36 months, my guess is sooner, you'll start to see mid-size and large institutional buy-side desks offering this to clients with full customized solutions in place, legal, here's how we deal with hard forks and all that nonsense, right? That's going to be really interesting.
Yeah, it sure is. A second question, please, from the audience.
Hi there. Sorry, I preemptively grabbed the mic. Sorry.
Oh, right. Okay.
My name is Dorji Sun. I'm the CEO of Perlin. I really agreed with a lot of your comments. The talent that I'm seeing coming into the market. So I'm a serial entrepreneur. I've had a few exits, and I actually see myself more as chief coach. So my team is between the ages of 17. That's one of our lead developers, to about 25. And they're the most talented tech team I've ever worked with. So what they're doing is we're addressing the compute market. So we're basically taking on AWS. We're creating a decentralized AWS that you can put your mobile phones and your laptops at night, plug them in. They create a decentralized network, and it's a distributed compute. We're trying to take on, instead of giving another $170 billion to Jeff Bezos, we're going to give 1 billion people. We've signed MOUs with the government of India, etc. So coming back, what I found fascinating, and you didn't really touch that much on it, but asset-backed tokens, looking at security tokens, do you think Goldman Sachs is going to have a desk? How do you think the big Wall Street type banks are going to come into this market for fundraising in the future? Thank you.
Karen, thoughts on that question?
Yeah, I think security token is definitely the trend. Actually, we talk about utility tokens. Most of the utility tokens now getting listed. But going forward, there are great companies list their tokens, and there will be a lot of security tokens, and there will be a lot of institutional investors interested in this area. But the thing is, there are two things. One is the company side, one is the listing infrastructure. So if you list the security token, you have to be able to trade and manage it as manage one IPO or a stock. So there's also high requirements on the governance of the infrastructure, which means the exchange and the custodian. I think why Goldman, they used to, in Hong Kong, they just upstairs from our building, so they came to us a lot, we talk a lot. So I think one critical challenge to the institutions are the custodian part, so which is missing. And this need to be licensed. If this can be resolved, and I'm sure it will be resolved, and a few teams are applying for licenses, and that would help the institutions really come in. So looking at the trend, I think that if the institutions come, this market valuation for the total crypto world can easily go 5 times, because at the moment it's less than 200 billion.
Yeah.
1 trillion is not that difficult.
Okay. Any other thoughts on that from the panel? Anyone? Jeffrey, sorry.
Yeah, like what Karen mentioned, I truly believe there's a lot of gaps in between. Like not only a custodian, who is going to be auditors, right? To audit the books. I think that's also one key areas that every one of us is facing. The big names. That's one. Looking at the whole technology itself, I would say that legacy big companies taking a step back, looking at the technology itself. Then for new startup with great ideas, going to the regulators, because this year we have engaged with many regulators. Going to the regulators again, the regulators would say that, hey, even if I want to regulate you, I may slap on a higher requirement than traditional security law. And then I look at it as that's something that the regulators would want to have a more comfortable stand. But for the new startup, it's impossible for them to get that. So I guess these 2 years we will see a lot of crossover with good tech and very traditional legacy stable company coming into the space together, working together. So I think that's where the technology will actually take off, rather than currently now.
Yeah, I agree with that. I think if the last 12 or 16, 17 months were largely about ICOs, and there was a lot of talk about utility tokens and so on, and the fundraising as the killer use case for crypto. Now we're seeing into the end of this year, and I think continuing into 2019, there's going to be a tremendous amount of talk about securities tokens, asset-backed tokens. I think a lot of the hardcore technologists in the blockchain world dismiss this. They don't view it, and again, going back to that disruption versus evolution argument, they don't really view it as a critically important, world-changing technological development. But the truth is, even if securities tokens just improve on the margins, some of these massive industries, one of the first verticals people are talking a lot about is real estate. I mean, there has to be the secondary liquidity and a lot of things for that to actually happen. But as that develops, I think marginal improvements going from, it's going from paper mail to email in some ways, it will have an enormous impact, and the market is absolutely, it's tremendous. So I think that'll just be a good thing for the overall story about blockchain and tokens.
I think we've got time for a couple more questions. Gentleman straight ahead of me here, please.
Good morning. Tuck Ming Yi, JRT Partners. We're a family office. I'm wondering whether anyone in the panel could comment on, in terms of evidencing protocols, so proof of stake versus proof of work. Sorry, yeah, that's right. And what's likely to come out in terms of a standard that's actually able to reduce transaction and settlement times, because that seems to be a huge barrier right now for anyone who wants to trade this market.
Right. I'll talk about that. I spent a decade on this topic. So let's talk about proof of work first and the problem it solves, right? So Bitcoin is secure not because of proof of work. Proof of work exists to actually create more Bitcoin. It's basically a game that computers play to solve a problem, and massive amounts of computing power is trying to solve that problem because the Bitcoin you win is so valuable. It's the blockchain itself that actually secures the network, because you'd have to go back in time to undo previous transactions. Now, I would claim that the electricity-based model of proof of work is way more fair in terms of creating a decentralized currency, which is what Bitcoin is doing, right? So it doesn't make sense in that model. To scale Bitcoin, it's clear that it's going to have to be a combination of off-chain scaling and slightly larger block sizes. And off-chain scaling is going to be things like the Lightning Project and other projects. So I think Bitcoin is, until we have quantum computing, which is going to undo the cryptography, it's more or less done. Ethereum is different because it's really not trying to be a new asset class in the context of digital gold. It's trying to basically be a programming and application deployment platform where throughput is paramount. But also, certain smart contracts running in China won't matter to a node running in Russia or in New York, right? So that's where proof of stake actually becomes very interesting, and I think makes a lot of sense. And so, because it can scale things in the short term that matter more for an application deployment environment, and proof of stake basically means I basically get a certain amount of votes based upon how much money I put up, or in this case, Ether I put up, depending upon how you implement it. But there's more detailed explanations online. I'd invite you to look at it. But it makes more sense in that Ether environment than it does in the Bitcoin environment. And I'm very hopeful that that proof of stake will work. But it's super early days, right? I mean, it kind of takes 2 steps back with Ether in order to take 10 steps forward, because it is a risky deployment because it's a large network now. So we'll see what happens over the next kind of 18 months. The good news is other cryptos have deployed proof of stake first, and it seems to be working, right? But again, it's about application deployment versus creating a new asset, if that makes sense.
Ron, did you have a thought there? Sorry.
No. I mean, I think there's a lot of development at that stage. Sort of at the fundamental levels, layer stage. I mean, we're focused on really. I think a lot of it is really applications around. When these fundamental technology are more rolled out to the consumer level, enterprise level, but.
Okay.
Yeah.
I'm getting a sign to wrap up, I'm afraid. It's been a fascinating discussion. I'd like to say thank you very much to all of you for taking part, and thank you very much to our panelists. I certainly learned a lot. I hope you did too. Thanks very much.
Thank you.
Thank you.